Hey everyone, it's Hamish here and we're back with another video today. Of course, as the title says, we are doing my investment portfolio for February 2019. And in the last month since the previous video, my portfolio has actually outperformed the S&P 500, which is the second time that it's outperformed the S&P 500 in a row. So that's exciting and I'm excited to talk to you guys all about that today. Of course, as always, we're going to start with the exact same structure. We'll start off with my holdings. We'll talk about asset allocation, how much equities, how much cash. We'll jump into what stocks I hold in the portfolio, what percentage each of them makes up, as well as how they've performed over the past month and that sort of thing. And then of course, we'll wrap it up by giving you my portfolio performance for the entire month of January and sort of summarize it and break it down into capital gains, dividend gains, and currency gains and see how we did overall and how much we outperformed the S&P 500. Also, just quickly, a couple of weeks ago, I ran a stock market giveaway competition where a bunch of you entered in the chance to win a free investing book of your choice. So there was 2 winners and I've selected those 2 winners. Their names are on screen. Congratulations guys. And I've reached out to both of you via email and thanks to everyone else who entered into the competition. I'll be looking to do another giveaway in the near future. It's something that I really like to do. So you can look forward to that. That'll be coming out in the next few weeks. All right, so let's start off by talking about my holdings. So of course, I always like to start out by looking at asset allocation. So basically pretty much every single month, and I think this is going to be true for every single one of these videos, we first want to talk about what assets I hold in my portfolio. And as it has been for every other video in the past, I hold 2 types of assets. I hold cash and I hold equities or stocks. And that hasn't changed. I still only hold those 2 assets. But what has changed is the percentage amount that is in equities compared to the percentage amount that is in cash. So back a month ago when I made the January video, I had 44% in cash and 56% in equities. As of today, I have 48% in cash and 52% in equities. So my cash position has increased by about 4%. And there's really 3 main factors that went into that increase. The first factor is that my stocks went up in the last month. So I had an increase in the size of the equity proportion. And that actually reduced the ratio between my cash position and equity position. So that was the one factor that actually made my equity position bigger compared to my cash position. But there's 2 other factors that sort of overwhelmed that one factor and made sure that my cash position grew larger than my equity position. That first factor is that I haven't made any more equity investments. So I haven't taken any of my cash and moved it into equities. And for that reason, my equity position didn't increase against my cash position. And the last factor, the second factor that increased my cash position was the fact that I had income from a numerous number of sources and they went straight into my investment account and directly increased the size of my cash position. So those 3 factors all together in combination led to a 4% increase in my cash position and at the same time, of course, a 4% decrease in my equity positions. So now I thought I would go through each of the individual equities that I have in my portfolio and first talk about how big they are, how much of a proportion are they in my portfolio compared to 1 month ago, and of course, how those stocks have performed in the market over the last month. So the first one we've got is NAB, and this is National Australia Bank on the Australian Stock Exchange. So NAB stock makes up about 4.7% of my portfolio, and that's down from 5.7%. And one of the contributing factors to that was the fact that the stock is down 1.2% in the last month. So the stock went down, and as a result, the amount of money, or the size of that position also shrunk. But also what contributed was the fact that I just added more cash to my portfolio, which made that equity position a little bit smaller. I'm actually going to be looking to take my money out of this investment and move it into another investment in the near future. And the simple reason for that is that I bought this a long time ago. It was my first investment, I believe. And at the current time right now, banking stocks and finance stocks are not within my circle of competence, meaning I don't understand them fully. And as a result, I can't fully understand or be confident in how much cash this business can return to me over the next 10 years. Whereas I have other investment opportunities where I do feel confident in working out how much cash they can bring into me. And they might not offer a 15 or 20 or 30% return. But if I'm confident in their 8% return, then I'd much rather have my money there than in a stock where I have no idea what the return could be. So that's probably going to happen in the next couple of months, I'm looking to make that transition. As soon as a viable investment opportunity comes up, then I will be taking that money and moving it out of that position. The second stock in my portfolio is YY, and YY stock makes up about 5.5% of my portfolio. And again, that is down from 6.2% 1 month ago. And same as NAB, the reason mainly is because of the fall in the stock price. The stock price fell 2.6% in the last month, and I won't be looking to add to this position at all because it is a speculative play. I like the company and I like how much cash they're generating relative to the price that I paid for it, but I'm not super confident in where this company will be in 5 or 10 years because it is in a highly fast changing industry, and it's also in a foreign country, in China. That's where it's based. So I don't have high confidence in how much cash they can produce, and for that reason, I'm going to keep it as a small proportion, as it's about 5% right now. Keep it as that small proportion and just watch what happens over the next 5 or 10 years. The next stock in my portfolio is Facebook stock. Now, Facebook stock makes up 8.8% of my portfolio, which is up from 8.5%. So this is the first position we've gone through where it's actually increased in size. And again, the main contributor to that was the movement in the stock price. Facebook stock in the last month is up 16%. So they had a really bad 2018, falling from around, I want to say July was when they had an earnings come out, and it dropped 20% in a day. Since then, it continued to trickle down all the way down to $125 per share. And then now they've had their earnings report come out. It was a lot better. And I think the pendulum of pessimism to optimism is starting to swing. There's a lot less negativity out there around Facebook. It seems to be behind us for now, at least. That can also swing backwards. There's no way of predicting which way it's going to swing. But just from what's been happening to the stock price and what's happening in the news, reading through articles, you can kind of see that at the current time, there's a lot less pessimism. And as a result, the stock price has been bouncing back quite nicely. I think it's up 30 or 35% from where it bottomed, a couple of months ago. And my position is up 16% in the last month. If you want to see my reaction to the latest Facebook earnings report, then I will leave a link to it down in the description below, and I'll also leave a card to it up there, so you can go check that out and hear my thoughts on Facebook's latest earnings. But in terms of this stock and this position in my portfolio, very similar story to YY. It is a speculative play. A bit less speculative, I would say, than YY, because Facebook is an American company. It's massive. Almost a quarter of the population, of the world population, use Facebook every single month, which is highly impressive. So they do have a much stronger moat than YY, but it is still in a highly changing industry, a rapidly changing industry. And again, I'm not confident in where this company could be in 10 years time. They might not even exist in 10 years time, or they might not be as profitable in 10 years time. So for that reason, I won't be adding to this position. I will just be watching it. And that's all I'm going to be doing with Facebook and YY, which are the two speculative positions in my portfolio. So the next one we've got here is my ASX 300 index, which is the Vanguard Australian Shares Index. Just tracks the top 300 companies in Australia. And this one makes up about 14.8% of my portfolio, and that's down from 17.1%. And this is an interesting one because the position has fallen even though the index itself has been up. So in the last month, it's been up about 4%. So the index is up, yet the position is down. And again, that just comes down to the fact that I've been adding to my cash position quite a lot from my other income sources. And as a result, that means that the equity positions in the portfolio have been shrinking. Again, there's nothing really I can add here except for the fact that this index fund that tracks the Australian market, I'm trying to keep it at around 15 to 20% of my portfolio. So it's currently at about 14.8, so just below that 15% mark. If it drops another couple of percent, either because the stock price falls or because my cash position builds up and makes that a smaller position in my portfolio, then I will probably look to build that back up to somewhere around the 18 to 20% of my portfolio mark. So the last stock we've got here is Thor Industries, and it's my biggest position in the stock market. However, it has been coming down and is not as big as it was compared to the other stocks in my portfolio as it was in the past. and that's for two reasons. Stock price has been falling, and me building up my cash position from my income sources and not making any further investments. So as it stands right now, Thor Industries is about 18.7% of my portfolio, and that's down from 18.8%, so not really any change there. And actually in the last month, Thor Industries is up. So Thor Industries is up 5.4% in the last month, which is quite impressive. It's good to see it bounce back. It's been falling since the start of 2018, and I've been investing periodically throughout that time. I shouldn't really say periodically because I'm not investing at consistent time gaps. It's not like I'm investing every 3 months or every 6 months or something like that. I just have certain ranges in which I think intrinsic value falls. And as it keeps hitting each of those ranges, as I get more and more conservative, then I add a little bit more. And that's what I've been doing for the past year. And of course, I will be looking to add more to this position. I'd be pretty happy for this position to be about 25% of my portfolio when I max it out. So if it falls a little bit further, if it falls maybe another 30 or 40%, two things will happen. The stock price will be in a range where I'm very happy with the outlook, buying it at that price and seeing how much cash comes in over the next 10 years. And it'll give me enough room to add a significant position in order to build that back up to 25% of my portfolio and average down my price quite significantly. So that finally brings us to looking at the portfolio performance as a whole. So how has this portfolio performed over the last month? And as always, we break this down into capital gains, which is appreciation in the stock prices. We've got dividends that come in from our stocks during the month. And then lastly, we've got currency gains, which is any currency exchange between the US and Australian dollars that benefit me as an Australian. So to start off, we'll look at capital gains. So capital gains were 4.16% for the month. So that's great. That's pretty positive. In terms of dividends, there was 0 dividends that I received during this month. And in terms of currency gains, it was 0.45%. So just a little bit of a change in currency as the US dollar continues to get stronger against the Australian dollar. And overall, that leaves us with a return of 4.61% for the month. And as I said at the start of the video, that outperformed the S&P 500, which returned 4.3%. And it underperformed the ASX 500, which returned 5.2%. So I outperformed the US market, but I underperformed the Australian market. And that is the same as it was last month. Now, of course, it's great that I was positive this month because last month I wasn't positive. So that's great. However, again, as I said last month, I really don't care about the performance in the short term, especially unrealized performance. I don't care what happens to my stocks in the normal stock market fluctuations if I'm not interested in selling. I'm interested in buying right now because I think that, well, I'm looking to buy now and sell a long time down the road when those stocks have appreciated in price. So really, I'm just looking for fluctuations that put the stocks in my portfolio into a price range where I make a big return over the next 10 years. That's the only thing I care about. So for that reason, I would actually like to see my portfolio going down because that basically would tell me that the stock prices of the businesses that I own, the businesses that I have confidence in, those stock prices are coming down, meaning that I can buy them at more attractive prices. So that's just my 2 cents on this. So I wouldn't worry too much about short-term gains, and I certainly don't feel stupid if I have a negative month, and I definitely don't feel smart if I have a positive month. What is going to determine whether or not I am a good long-term investor is my performance over the very long term, over a 10 or 20 year period. In terms of what am I doing in the markets at the moment, pretty much the same as last month. I'm not buying anything right now, although I am happy to buy if stocks fall into a price range that gives me a significant margin of safety. But that's all we've got for this video, guys. I hope you enjoyed this one, and if you did, make sure you leave a like and let me know your thoughts on this video down in the comment section below. And of course, if you're new around here and you want to see more, and you want to learn how to invest or just learn about specific investments and their earnings and that sort of thing, then make sure you become a member of the team, hit subscribe and hit that notification bell so you don't miss out on any of the future notifications. But I hope you guys have a great day, and I'll see you in the next one.